The headlines are ones where it's really interesting to watch, and there'll definitely be more that we'll see because it's the first time things are being pressure tested, both within private credit
Yeah.
and then also within that evergreen structure.
Well, how big a problem is it? I mean, the problem I have with scope and scale is I got all the marketers silenced. I mean, there's a lot of sweat out there. I get it. We don't want to, Paul and I don't want to create, innuendo or rumor, speculation or that. But like, what do you expect to see Tuesday at 10 a.m. or May 3rd? Is there an out there you can go to and guess?
So definitely not willing to put out a guess on it. But as you think about the liquidity portion of it, and if you think about the evergreen structure, somewhere along the way, that evergreen structure within the private market, so think of that as the ones where they're continually invested, that became synonymous with this semi-liquid concept. I would argue that that evergreen name should be more synonymous with that more continuously invested versus that semi-liquid. So I think what's happening is what you're seeing is you've got underlying investments that aren't liquid, that aren't part of a marketable security. And so what's happening is you've got this mismatch in liquidity from a redemption term and that underlying position. So you see those redemption limits and gates that are typically in that 5 to 7%, more of a break mechanism. So think of it as hitting the brakes versus a breakdown of things that are happening.
Lynne, I've heard this to the extent that there is stress in the private credit market. I heard it's more of, or I'm coming to understand it's more of a liquidity issue than a credit issue. Are there fundamental credit issues, do you think, in the private credit space, broadly defined?
Broadly speaking, we're not seeing any sort of major defaults or any sort of major kind of broad market spectrum happening right now. What you're seeing is maybe a little bit more in pockets. There's definitely concern and headlines around AI disruption in software companies. Some of them are extrapolating more towards broad technology, but there really isn't a one size fits all within this either. So AI definitely has the potential to disrupt lots of different industries and different companies, but there's also this opportunity for a lot to gain and benefit from that as well too. So we will absolutely see more dispersion from here forward when you look at both within underlying sectors and then also just the outcomes of the underlying managers within private credit.
So what's the appetite for your clients, or what's the discussion with your clients about private credit here? Because it has been such a tremendous growth area. You've seen tremendous asset flow. Are some of your clients, are they more reluctant now to go to private credit?
So what you're seeing is there's been, as you mentioned, there's a ton of growth that's happened in this space. It's about tripled in size over the last 10 years, and you've seen this evergreen component too. Keep in mind that that evergreen component, so that's the one that's continuously invested versus that drawdown structure that's historically been synonymous with private markets, that you've seen that evergreen structure grow, but it's only about a third of that broader private credit market space. And so what you're seeing is a lot of headlines and a lot of
Right.
conversation around what does this all mean? So a lot of the conversation with our clients is more of that education. We spend a lot of time educating up front to make sure
Right.
that as we've had this more of democratization, that folks are starting to get more and more educated around what that actually means.
Okay, but let me talk about the shell game here. The bottom line is the attraction of private credit is I pick up how many percentage points of yield over a normal fixed income investment. What's that number, Lynn?
So it's been historically a couple percentage points above that. So think of more of that high yield space. So if you think about the
Right.
farther out you go on that spectrum, it's a couple percentage points.
So are Northern
And it's
Trust,
kind of remained at that level.
okay, but are Northern Trust people's already saying enough? I'm not going to do this?
Typically, no. So what we're seeing is a lot more of clients really trying to understand what are those underlying investments. And so when the headlines hit on the AI disruption and software, it's really understanding like what are those investments? What's the size? And a lot of what you're
Okay.
seeing is more of that discipline coming back into play.